Let's be real for a moment. How many of you are living paycheck to paycheck? It's a question that might make you uncomfortable, but it's one that needs to be asked. It's a tough question, but it's the reality for so many millennials and Gen Zers. Despite working hard and often holding down multiple jobs, the struggle to make ends meet is all too common. You work hard, you earn a decent living, but at the end of the month there's not much left to show for it. The bills pile up, unexpected expenses arise, and before you know it, your paycheck is gone. This constant cycle of financial strain can feel like a heavy weight on your shoulders. It's a burden that affects not just your wallet, but your mental and emotional well-being too. It can make you question your choices and your future. You might wonder if you'll ever be able to break free from this cycle and achieve financial stability. The truth is, you're not alone. This struggle is shared by millions of young adults across the country and around the world. Millions of young adults are facing the same challenges. The sense of community and shared experience can be a source of strength and support. The economy, student loan debt, and rising living costs have created a perfect storm for financial instability. These factors are often beyond your control, making the situation even more frustrating. It's easy to feel overwhelmed and discouraged when you're constantly bombarded with messages about the importance of investing and building wealth. Social media, financial gurus, and even well-meaning friends and family can add to the pressure. But how can you even think about investing when you're struggling to make ends meet? The idea of setting aside money for the future seems impossible when you're focused on surviving the present. It's important to remember that financial peace isn't about how much money you make. It's about having control over your finances and making choices that align with your values and goals. It's about having control over your finances and making choices that align with your values and goals. This means prioritizing what truly matters to you and finding ways to manage your money that reflect those priorities. Don't let the pressure of societal expectations dictate your financial decisions. It's easy to get caught up in the comparison game, but remember that everyone's financial journey is different. Instead of focusing on what you can't control, shift your energy to what you can. This might mean cutting back on non-essential expenses, finding ways to increase your income, or seeking out financial education resources. Create a budget, track your spending, and find ways to reduce your expenses. These small steps can make a big difference over time and help you regain a sense of control over your financial situation. Every dollar you save is a dollar you can use to build a more secure future for yourself. It might not seem like much at first, but over time these savings can add up and provide a cushion for unexpected expenses or future investments. Consider exploring side hustles or additional income sources. Many young adults are finding creative ways to supplement their income, whether through freelance work, gig economy jobs, or starting their own small businesses. Seek out financial advice and education. There are many resources available, from online courses to financial advisors, that can help you better understand your finances and make informed decisions. Celebrate your small financial victories. Every step you take towards financial stability is worth acknowledging and can motivate you to keep going. Envision a brighter financial future. It might not happen overnight, but with persistence and smart choices, you can work towards a more secure and fulfilling financial life. Remember, you're not alone in this journey. Lean on your community, share your experiences, and support each other in the pursuit of financial growth and stability.
We live in a world obsessed with appearances. Social media feeds are filled with curated images of luxury vacations, designer clothes, and extravagant lifestyles. It's easy to get caught up in this illusion of success and feel inadequate when your own life doesn't measure up. The pressure to keep up with the Joneses, or rather the Kardashians, can lead to poor financial decisions. We're constantly bombarded with advertisements for the latest gadgets, trendy clothes, and must-have experiences. It's easy to fall into the trap of thinking that happiness can be bought, but the truth is, true happiness comes from within. It's about finding joy in the simple things in life, pursuing your passions, and connecting with loved ones. Don't let societal pressures push you into debt or force you to live beyond your means. Remember, what you see on social media is often a carefully constructed facade. It's not a true reflection of reality. Focus on building a life that is authentic to you, not one that is designed to impress others.
While both millennials and Gen Z face unique financial challenges, their attitudes towards investing differ significantly. These differences are shaped by the distinct economic environments they grew up in and the financial experiences they have encountered. Millennials who came of age during the 2008 financial crisis tend to be more risk-averse. This period of economic instability left a lasting impression on their financial psyche. Many witnessed firsthand the devastating impact of economic downturn on their families. The loss of jobs, homes, and savings during this time created a cautious approach to investing. This experience left them wary of traditional investment vehicles like the stock market. They often prefer safer, more predictable investment options such as bonds or savings accounts.
Gen Z, on the other hand, has a more optimistic outlook. Growing up in a more stable economic period, they have not experienced the same level of financial trauma. Growing up in the digital age, they are comfortable with technology and have access to a wealth of financial information at their fingertips. This access allows them to make more informed and diverse investment choices. They are more likely to invest in alternative assets like cryptocurrency or explore entrepreneurial ventures. Their comfort with digital platforms and new technologies makes them more open to these non-traditional investments. This willingness to embrace risk could potentially lead to greater financial rewards. They are not afraid to take chances in hopes of achieving significant returns. But it also comes with increased volatility and uncertainty. The high-risk nature of these investments means they could face substantial losses as well.
Regardless of which generation you belong to, the key to successful investing is education. Understanding the basics of investing and staying informed about market trends is crucial. Take the time to learn about different investment options, understand your risk tolerance, and diversify your portfolio to mitigate risks, and develop a long-term investment strategy. Setting clear financial goals and creating a plan to achieve them can help you stay focused and disciplined. Don't be afraid to seek guidance from a financial advisor who can help you make informed decisions aligned with your goals. A professional can provide personalized advice and help you navigate the complexities of investing, ensuring you make the best choices for your financial future.
It's no secret that the gap between the rich and the poor is wider than ever. This growing divide is not just a matter of numbers, it represents a fundamental shift in the economic landscape that affects millions of lives. The rich are getting richer, often through investments and inherited wealth, while the poor struggle to make ends meet. This wealth disparity is even more pronounced when we look at the difference between the assets owned by older generations and those held by millennials and Gen Z. Older generations, particularly baby boomers, have had the advantage of economic conditions that were more favorable for wealth accumulation. They were able to buy homes at lower prices, invest in a booming stock market, and benefit from robust pension plans. Many baby boomers and Gen Xers benefited from a strong economy, affordable housing, and pensions. These factors created a safety net that allowed them to build and sustain wealth over time. They could rely on stable jobs with good benefits, and the cost of living was relatively low compared to today. This allowed them to accumulate wealth over time and pass it down to their children. Inherited wealth can provide a significant head start in life, offering opportunities that might otherwise be out of reach. This includes paying for higher education, buying a first home, or starting a business. However, millennials and Gen Z are facing a very different reality. The economic landscape has changed dramatically, and not in their favor. They are entering the workforce during a time of economic uncertainty with fewer job opportunities and less job security. Stagnant wages, rising living costs, and crippling student loan debt make it extremely difficult to get ahead financially. The cost of higher education has skyrocketed, leaving many young adults with substantial debt that takes years, if not decades, to pay off. This financial burden can delay major life milestones like buying a home or starting a family. Many young adults are struggling to save for a down payment on a home, let alone build a substantial investment portfolio. The dream of home ownership, once a cornerstone of financial stability, is becoming increasingly elusive. High rent prices and the cost of living make it difficult to save, and the stock market can seem like a risky venture for those without disposable income. This disparity in wealth has significant implications for the future. It affects not just individual lives, but the economy as a whole. When a large portion of the population is financially insecure, it can lead to reduced consumer spending, lower economic growth, and increased social unrest. It means that younger generations may have to work harder and longer to achieve the same level of financial security as their parents. They may need to take on multiple jobs, work longer hours, and delay retirement. This can lead to increased stress and a lower quality of life.
It's important to acknowledge this wealth gap and work towards creating a more equitable society. This involves not just recognizing the problem, but actively seeking solutions. We need policies that address the root causes of economic inequality and provide support for those who are struggling. This requires addressing systemic issues like income inequality, access to affordable education, and predatory lending practices. Income inequality can be tackled through progressive taxation and fair wages. Affordable education can be achieved through government subsidies and student loan reforms. Predatory lending practices need to be regulated to protect vulnerable populations. We need to create an environment where everyone has an equal opportunity to achieve financial well-being, regardless of their background or circumstances. Financial education is crucial in this regard. By teaching financial literacy from a young age, we can empower individuals to make informed decisions about their money. Additionally, providing resources and support for those facing financial barriers can help level the playing field.